China has taken a major step in this moment to get around the US hegemony. Previously, we saw the creation of the AIIB, the direct response to the World Bank and the IMF. Now we have yet another sidestep in evasion of the Western forces. You came here for the truth, so let me unveil that for you. Today we are going to look at China, we're going to look at the US, and connect that in with several other issues. Let's begin. China is expected shortly to launch a crude oil futures contract priced in yuan and convertible into gold in what analysts say could be a game changer for the industry. I do believe that it could be a game changer. You have seen what has taken place in recent years with the setup of the AIIB for one. Now, while it is quite small in comparison to the World Bank and IMF, it does show that it is important because so many countries have gotten on board. That's key. And what's also important to note is the currency swaps which have taken place. Dozens and dozens of countries have signed up with China to do a portion of their trade in their own currencies, not using the US dollar, and that threatens the monopoly. The contract could become the most important Asia-based crude oil benchmark, given that China is the world's biggest oil importer. Crude oil is usually priced in relation to these futures, both denominated in US dollars. That's very key to note because all of the commodities are going to be priced in US dollars, giving the US a monopoly. And so, if they start pricing commodities in another currency, all of a sudden, they don't have to convert their currency into US dollars before buying whatever it is from another country. That is a huge damage to any reserve currency, which happens to be the US at this time. Things are changing. They're changing slowly. It's not going to happen overnight, but it is very important to note. So basically what they're saying here is that China's move will allow exporters, such as Russia and Iran, to circumvent the US sanctions by trading in yuan. To further entice the trade, China says the yuan will be fully convertible into gold on the exchanges in Shanghai and Hong Kong. So this is big news. We'll see what happens exactly. It's not just big news for these three countries because I'm sure that more will be getting involved. And not just in Asia. It's going to be a worldwide thing. Look at what happened with the AIIB. You had countries like Canada, for instance, signing up to that. So it's important to take a look at this and see where it will go from here. There is a chart, a pie chart here down below. All I wanted to know from that was the fact that they received 1/3 of their crude from Russia. So obviously big friends with Russia, and I'm sure that that number can increase and probably will in the future. Oil futures trading in China is set to finally start later this year after several delays, providing one of the world's top consumers with a bigger say in Asian oil pricing, not to mention an entry into a trade that's worth trillions of dollars daily. So let's quickly cover this. I don't want to spend too much time on it. The International Energy Exchange based in Shanghai, where the contracts will trade, said that it is at the moment working on the finalization of some of the technical issues. This comes after years of delay. So here we are at the precipice of something new in the commodities world, in that hegemony that the US has. There's more in here. Essentially what I'm seeing is that China is finally finding ways to do away with the US dollar. They've been talking about it forever, but now they're finally setting up the infrastructure to do so. That will not, once again, I'll say it again, but there's always going to be comments in the box below. But anyway, it's going to be a thing that will take some time. Okay, let's move on. Stocks have priced in twice the rate of the growth of the EPS, earnings per share. Think about this right here. The dotted line is a cumulative percentage growth of the S&P 500. And you can see basically it's really shot upwards. However, look at this, dipping down significantly before rising up. I think that what we are seeing here is that companies, first of all, number one, only a select handful of companies are actually doing well. Many of them are either stagnant or still are really in a depressed phase. Okay? So these few companies, their earnings per share have risen. And I think that those select few companies like the FANG stocks, like, there's a few out there, particularly FANG stocks, that have done extremely well, all because of, central bank printing money, buying them. At the same time, their PE ratios and all the statistics around them are just simply completely out of whack. These companies don't earn money, a lot of them, yet their stocks continue to rise. And I believe, if I'm not mistaken, if memory serves correctly, Netflix being one of them, where you have a company that may be bleeding out, but it doesn't matter. As long as the stock's rising, more money will flow in, and we can continue to laugh at this funny joke. S&P 500 change in the earnings per share versus the change in price. So this right here, it's too short of a graph to show you, but this is Q3, and you'll see it moving up to some degree anyway. Whereas the earnings per share right here on a decline. When we look at any of these statistics, I don't like to put too much weight into them, but I'm just noting that what we have in the stock market, it's so frail, it's so fragile. And yes, they can print money, they can keep the stock market alive to some degree, but eventually it has to become a problem for all of these other companies out there that are not doing well. It's just select few that are doing okay. If those and central bankers were smarter, they would print more money and give it to the other companies as well. That's the only way that this can be solved, as crazy it is. I mean, we're going towards worthless confetti, so you might as well go out in a big bang. Don't try to delay it. Okay, now they're not the only country to do so, but Austria has, and congratulations by the way, set the sales of a 100-year bond. Wow. The 100-year bond. What foolish design of debt that we can have in this world. I mean, what a joke. What a joke. The bond is terrible as it is, but you're going to buy a bond that matures after 100 years? Does anybody wait for these to make it to maturity? Anyway, I just thought this is funny. This is the humor hour right here on the funny GPS. All right. JP Morgan CEO Jamie Dimon says Bitcoin is a fraud that will eventually blow up. It's worse than tulips, won't end well. Someone is going to get killed. Bitcoin fell right after he said this. Oh, of course, it's something that the market will certainly recover from. But he actually said he would fire anybody that was trading it. That's how critical he is of it. And I think this is great news for Bitcoin, actually, because we don't want the bankers to like it. That's just I really dislike whenever a banking establishment is somehow positive towards Bitcoin, towards cryptocurrencies, towards the blockchain. It's not good. It is not good news. You want them to stay away. You want them to say, this is funny, this little toy. That's what you want. If you're into Bitcoin, that's what you want. You don't want the adoption by the financial companies to put their billions of dollars in. You want it to be slow and organic and underground. So we'll see what happens. Oh, and by the way, he said his daughter bought Bitcoin and she thinks she's a genius now, which is real, by the way, if you haven't read that. All I wanted to mention was with this one here, the San Francisco employee retirement system, so we're looking at pensions here, is facing mounting pressure to unload its roughly $470 million worth of investments in the fossil fuel industry. I really don't like any institution, government, corporation, individuals, anything to pressure anybody else or any other group or anything to do a certain something. You may not agree with the fossil fuel industry. To me, it doesn't matter. I just find it very funny that there are establishments out there that do a lot worse than what's happening here, and yet this gets the blame. This gets targeted. There could be a lot of better investments than this. I'm not even saying that this is a good investment. I'm just saying that whatever the agenda is and the advancement of, let's call it, I have to watch my words these days, but the technocratic elite and their dealing and everything else. The advancement of that agenda must be continued. The media must be going along with it, and people involved in the matter all the way, top to bottom. They have to be complicit in some way, in their own compartmentalization type of world that we live in. So anytime I read something, I'm always thinking about that compartmentalized view of this article here out of the San Francisco Chronicle. They have to mention that, and the institutions on either side of this have to remain within their own compartmentalization. And so I have to figure, how do I look at this piece of information? How do I look at any piece of information? And it's with a real critical view. And I take it for what it is. And this article, it's not even significant, to be honest. Just the way that I look at this, the way that I look at investments, the way that I look at when you see some of these people out there, are they being paid or are they part of the agenda itself to say what they're saying? And too often, I believe that they are. They're either working on the inside or simply being paid to do so. We saw that with the whole Glaxo issue a few years ago, where they had many people in the medical establishment on their payroll to be spokesmen for them. And that came out, $3 billion suit afterwards. Probably still a drop in the bucket for them, but it was a known fact. So I'll leave it at there. I know I've ranted a bit here today. I hope that you found it informative. If you did, please give me a thumbs up. Please subscribe to the videos as well. It's very important that you subscribe to the videos to catch them all. There's a little subscribe button below, and then you'll see a little bell beside that. If you hit that bell, it ensures that you are getting notified of every single video that I post. So please do so. I'd really appreciate everybody on here. It's such a great group of people. Thank you all. And last but not least, if you found the video informative, I know you'll find my books, The Money GPS, and my new release, Global Economic Collapse, even more informative. The first book is about the 4 asset classes and how to profit from them, whereas the newer book takes on familiar concepts, but I get into reducing your monthly expenses, becoming self-sufficient, and quite a bit of tax incentives, earning income, everything else. Check that out at Amazon. Links are in the description below. Take care.